Today, Bitcoin dips to the $95,000 level. Shares of Robinhood pop after it reports a surge in crypto transaction revenues, and Lehtiniitty of Borderless.xyz breaks down the stablecoin bill introduced by Senator Bill Hagerty last week. Welcome to CNBC's Crypto World. I'm Ryan Baker. Crypto markets in the red this morning. As of noon Eastern, Bitcoin slid 1.7% and was trading at the $95,000 level. Ether fell less than 1% to 26.26, and Solana dropped 2%. Okay, let's talk about today's top stories. Robinhood shares popped after the company posted record revenues for the final quarter of 2024. A big driver of that growth, a reported 700% spike in year-over-year crypto transaction revenues, making up around half of its $672 million in transaction-based revenues. Of course, crypto markets experienced a post-election rally at the tail end of 2024 as investor optimism around friendlier US regulation grew. Robinhood CEO Vlad Tenev joined CNBC this morning and shared what the momentum in crypto markets has looked like since the new year.
Q1 has been strong so far. We've seen the momentum continue, and crypto's been a big story. Obviously, it's done well since the election, and our crypto revenues were up 700% year over year. Crypto volumes up over 400%.
Around midday, shares of Robinhood were up by 11%. Next, President Trump nominated a former crypto executive to lead the office of the comptroller of the currency. The White House yesterday submitted its nomination for Jonathan Gold, former chief legal officer for the crypto firm Bitfury. If confirmed, Gold would be responsible for leading US regulation around national banks. This follows a string of crypto-friendly or familiar picks by the president, including David Sachs as a newly created White House AI and crypto czar. Last, 2024 might set a record for crypto scam losses. That's according to a report published today from blockchain analytics firm Chainalysis, reporting a 40% year-over-year increase in pig butchering scams, where scammers build trust with the victims before stealing their money. Chainalysis says these types of scams account for a third of crypto scam revenue so far in 2024. The largest illicit gains were from high-yield investment scams, accounting for half of crypto scam revenues last year. But Chainalysis says revenues in this category are declining as funds obtained through pig butchering scams grow. These figures are subject to change as the analytics firm still expects to identify more illicit activity for the year. For more on pig butchering scams and the tools used by Chainalysis to trace these funds, you can check out this explainer from CNBC Crypto World. Alright, let's dive into stablecoins for our main story. Crypto World's Tanea McKeel spoke with Borderless.xyz CEO Lehtiniitty about developments around stablecoin regulation here in the US. He shared why he believes the bill proposed last week by Senator Hagerty differs from other stablecoin bills introduced in the past. He also discussed why he believes a regulatory framework around stablecoins could benefit the US dollar.
Well, Kevin, thank you so much for joining us on Crypto World today. Let's talk about the stablecoin bill put forth in the Senate. It would create a definition for a stablecoin and create a licensing framework for issuers, along with some regulations around reserves. Talk to me about how the industry is feeling about this legislation and whether it hits the points that crypto leaders have been asking for.
Well, thanks for having me, Tanea. I think this is the kind of fifth stablecoin proposed legislation that we've seen in the US in recent times. We saw the Lummis-Gillibrand proposal in 2022. There was a PWG report in 2021. There was the Clarity for Payment Stablecoins in 2023. And now we have the Genius Act, as the acronym is called, for 2025. And I think in general, this is by far the most comprehensive proposal that we've seen. And I think it's also one of the friendliest proposals that we've seen. It does a great job of balancing what is really at the core of the technology industry in America, which is innovation and competition, with also, on the other side, stiff penalties for those that abuse the system and strong protections of consumer assets. One of the things that's really important about the Genius Act that I think allows for this innovation is there is a dual regulatory framework where stablecoins have market caps of under $10 billion are going to be regulated by the states, and stablecoins of above $10 billion then are regulated by the OCC and the Federal Reserve. And that's really important because it means it's going to allow fintechs and other innovators to compete in this marketplace. And it's going to allow them to issue these smaller stable coins. It lowers the barriers of entry of trying to innovate in the space. And then if you do get into the 10 billion and plus, where we really have to worry about consumer protections, then it steps up that regulation to the federal level, which is a pretty unique feature of this bill that I think everyone's excited about.
Great recap. So why this bill first? We've been looking at stablecoins for a long time coming into this year, and even going into last year, honestly, we were targeting either stablecoins or the regulatory framework. So why this versus some of the questions around securities and protections? How did this issue of stablecoins become sort of the low-hanging fruit?
I think the administration has made a lot of noise about reestablishing U.S. dominance globally. And stablecoins are one of the best ways for the U.S. to export the U.S. dollar around the world. And this stablecoin bill is really positioned around supporting USD dominance, requiring that assets that are backing stablecoins be held in U.S. treasuries, and therefore driving more demand for treasuries and treasury-like assets. And I think we've seen stablecoins come first, mostly because it's really important to the general administration's interests to be putting that USD at the forefront and to really be taking our currency and to be exporting it globally.
So this is a bipartisan bill in the Senate. What does that say to you about the likelihood that this passes? And while the lawmakers putting their name on this bill have previously been pro-crypto, what is the general sentiment among lawmakers toward crypto versus the last Congress?
I think what you've seen in the past is you've seen several lawmakers, including Senator Lummis and others, who have been pro-crypto for the vast majority of their kind of recent Senate tenure. But you've had an executive branch that's been very anti-crypto. So a lot of the initiatives that have been proposed and have been put out there just haven't gone anywhere. Now you have the same senators, which is great. It's a bipartisan initiative, which I think is great and always increases the likelihood that something goes through if it's a bipartisan effort. And what's really changed is you now have an executive branch that is pro-crypto and that is pro kind of the national interests of our currencies, dollar dominance, things of that nature, and that recognizes that blockchain has a part in that technology. So, nothing is ever passed until it's passed by any means. But I think we have a much better climate now to actually effectively pass these laws than we did before.
Where does competition on stablecoins stand right now in the U.S.? We've got Circle, we've got Tether, we've got PayPal. Would this bill that we've been talking about change any of that, or would it solidify the top contenders?
The bill definitely favors what I would call the regulated stablecoins. So that means Circle with USDC. It means some of the Paxos and consortium tokens like USDG. Those are the ones that are really going to be favored. And of course, PayPal's PYUSD. And it's going to be at the regulatory detriment of the less regulated players like Tether's USDT.
And then give me just sort of a snapshot of the market for stablecoins right now. The last I had checked on the market cap, it is continuing to grow. So where is it now at this point in the new year? Not so new anymore, but where is it at this point year to date? And what is that telling us about, the activity in the crypto market and how things have changed or at least intensified under this new Congress and government?
Definitely. The exact number escapes me at this moment, of course. But we did reach new kind of record market caps in USDC over the past week. So the stablecoin market caps are continuing to grow. The payment volumes that we see on chain that are being done in stablecoins continues to grow. And I can tell you from the Borderless.xyz perspective, the amount of demand and interest that we have from payments companies and corporate companies continues to grow on a daily basis. So kind of market caps, payment volumes, and the interest that we see on the sales side of our funnels are all continuing to track towards increased adoption.
And we've talked about this in the past, but historically, the stablecoin activity has been a measure of trading volume and activity, and there is all this new interest from various different players in growing those other use cases for stablecoins. What do you expect to see emerge as some of the dominant ones this year?
I think there's always strong correlations between stablecoins and the rest of the crypto markets. Unfortunately, I think recently Bitcoin has slid down and we're at 96 and change at the moment. I think I can't see the tracker behind me. But I think we're going to shop sideways for a little while here, as a lot of the euphoria that came with the change of administration has maybe worn off is the wrong word, but that's now old news. And kind of words need to be put into actions. And I think if we see some very serious adoption of a national reserve of Bitcoin or other things like that, that will certainly be moving the markets. But for now, it seems to be a lot of sideways movement as kind of the adoption catches up to the hype. And hopefully that means that we at least stay at these levels and we don't continue to slide back down.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.